Well, good morning, everybody. I want to welcome you to our webinar today. I'm Mindy Piatz, a principal with Brady Martz, and I also serve as the government industry lead for our firm. And I'll be your host today for our webinar where we're going to go over GASB 103, and 104. First off, I want to thank you for spending your time with us. I know all of you are busy as you're gearing up for another quarter here, but at Brady Martz, we really want to provide some valuable insights into what we're doing, into new standards that are going to impact you. And so Bethany Shashansky is going to be going over the upcoming changes for GASB 103, which has a lot of different things in it, and then a quick overview of GASB 104. Bethany is one of our government experts, and she's here to break down the technical side of things and make it easy for you to understand and implement for this next year. Just a couple notes before we jump into the session. If you did elect to sign up for the CPE option, there will be polling questions, so be sure you answer the polling questions. We are also recording today's session, so after the webinar, we'll send out details regarding when that recording is available and provide a link that you can rewatch this should you need that. Lastly, at the bottom of your screen, there's a resources tab. If you don't see the resources tab, there should be a tab called More, and that will, More will take you to the resources tab, but in there you will have the slides for today's presentations. And then there's also another tab for Q&A. So if you have questions that come up, just be sure to answer those in the Q&A section, and we will go over those at the end of the webinar. So with that, I'm going to pass it over to Bethany, who's going to get us going.
Good morning, everyone. As Mindy noted, my name is Bethany, and I'm a senior manager with Brady Martz. Before we get started, let's just take a look at today's agenda. First, we'll provide a brief overview of GASB 103 and why it was issued. Then we'll walk through the major reporting changes, discuss how those changes may impact the financial statements, and review some practical implementation considerations. We'll wrap up GASB 103 with key takeaways. We'll then move on to GASB 104 and why it was issued, its major reporting changes, and review some considerations and impact it will have. Finally, we'll wrap up with any questions you may have. Introduction and overview. In governmental accounting, we don't often see broad changes to the reporting model. The last major overhaul really occurred with GASB 34, which fundamentally changed how governments present financial information by introducing the government-wide financial statements and the MD&A. Over the last 2 decades, governments have applied portions of GASB 34 differently. Some of those differences were intentional because of the guidance allowed flexibility, while others developed simply through practice. As a result, users of financial statements often found it difficult to compare governments. GASB 103 addresses those concerns by standardizing certain reporting requirements and modernizing the model to reflect today's governmental environment. The first purpose of GASB 103 is ultimately to update the governmental financial reporting model. Over the years, governments and financial statement users identified areas where reporting requirements had become inconsistent or overly complex. And so GASB 103 addresses those concerns by refining how certain information is presented, particularly within the proprietary fund reporting, the MD&A, and budgetary comparisons. The standard is intended to better align financial reporting with how governments currently operate and how stakeholders analyze financial performance. The second purpose of the standard is to improve transparency and consistency, and this will be a pretty overlying theme throughout this entire presentation. And so governments often classified operating and non-operating revenues differently, which kind of made it difficult for users to compare financial performance across entities. So GASB 103 provides a clearer guidance and standardized definitions to reduce those inconsistencies. The enhanced reporting requirements also improve the visibility into the unusual transactions, subsidies, and operational results. helping users better understand the financial condition of an organization. The third purpose of the standard is to enhance the usefulness of the financial statements. GASB 103 aims to make the financial statements more meaningful and decision useful for stakeholders, such as governing boards, taxpayers, grantors, and auditors. The updated MD&A requirements encourage management to provide clear explanations of significant financial changes and the reasons behind them, rather than simply just restating the numbers from the financial statements. Overall, the changes are designed to help users more easily identify trends, evaluate operational performance, and make informed financial and policy decisions. It's important to note that GASB 103 generally does not change how transactions are recognized or measured. It instead changes how information is presented, classified, and communicated. GASB 103 is effective for fiscal years beginning after June 15th, 2025. We will now launch our first polling question. Moving on to the goals of GASB 103. Before we discuss the specific reporting changes, I think it's very helpful to understand what GASB was trying to accomplish with this standard. GASB 103 wasn't created because there was something fundamentally wrong with the governmental reporting, but more so after more than 20 years of applying GASB 34, GASB has identified several areas where reporting had become inconsistent or felt financial information could be more useful. The first goal was to improve the readability of the financial statements. Government financial statements can be complex, particularly for board members, taxpayers, or other stakeholders who may not have an accounting background. GASB wanted to make information easier to locate, understand, and interpret. The second goal was to increase the consistency across the governments. Historically, governments have had some flexibility in how certain information was presented. While flexibility can be beneficial, it can also make it difficult to compare one government to another. GASB 103 standardizes several reporting requirements to improve comparability. The third goal is to clarify operating versus non-operating activities, particularly for proprietary funds. Different governments sometimes classify similar transactions differently, making it difficult for users to evaluate operational performance. One of the most significant changes in GASB 103 addresses this issue directly. Finally, GASB wanted to make the management discussion analysis, or the MD&A, more meaningful. Rather than simply repeating the information already included in the financial statements, management is encouraged to explain why the financial results changed and discuss the factors driving those changes. This helps users better understand not just what happened, but what could happen. Ultimately, all of these goals support a broader objective, providing clearer, more transparent, and more decision-useful financial information to stakeholders. Moving on to GASB's key reporting changes. We'll take a look at the specific reporting changes that were made to accomplish these goals, beginning with the management discussion and analysis. This is actually one of the more noticeable changes under GASB 103. And the key updates dealing with the MD&A is previously it really focused on how much things changed, where now it emphasizes why changes occurred. The second update really encourages governments to write more narratively and less mechanically. And the third key update reorganizes the MD&A into 5 required sections. Those sections include the overview of the financial statements, financial summary, detailed analysis, significant capital and long-term financing activity, and the 5th one is currently known facts, decisions, or conditions. Overall, the new guidance emphasizes concise and analytical discussion. Instead of repeating the financial statement balances, management is expected to explain the reasons behind these significant changes and discuss more important economic or operational factors affecting the organization. Think about the MD&A from the perspective of a board member. Most board members really don't read every note disclosure. They also don't analyze every financial statement line item. The MD&A is often the first thing they read. And historically, many MD&A sections simply repeated information already contained in the statements. I'm going to provide an example of kind of what is under the current and under what is expected under GASB 103. So under the current one, people may say cash increased by $500,000 during the year. This statement tells us really what happened, but not why. And so under GASB 103, management would probably explain it more so cash increased primarily due to receiving grant funds earlier than expected and delaying capital expenditures until the following year. This explanation provides context and allows users to better understand the operations. Another good example is potentially with, say, a housing authority who experienced a significant increase in tenant revenue. Readers would want to know whether the occupancy increased because rates increased or new units became available. This slide here presents the MD&A under the GASB 34 versus the GASB 103. Under GASB 103, the first section of the 5 required sections is the overview of the financial statements. This provides a clear introductory explanation of the basic financial statements and how they relate to one another and the significant differences in the types of information they provide. The second required section is the financial summary. This is condensed comparative financial data derived from the government-wide statements that directly compares the current fiscal year to the prior fiscal year. The third section is the detailed analysis, and this actually combines 2 sections of the current layout. The detailed analysis essentially provides analysis of changes in the financial position for government and business type activities. It also provides explanations as to why amounts changed from the prior year. Discussion of significant policy changes and important economic factors that significantly impacted resulting operating results for the year. The final thing that the detailed analysis section includes would be an analysis of the fund or net position and the results of operation for each of the major funds. The fourth required section under GASB 103 is the significant capital asset and long-term financing activities. Descriptions of significant capital-related activities and major long-term financing activities would go in here. This would also include right-of-use assets like leases and SPIDAs. This section addresses any relevant economic factors and policy changes that impacted these activities. The fifth and final section required under GASB 103 is called Currently Known Facts, Decisions, or Conditions. A focused description of facts, decisions, or conditions known as of the financial statement issuance date that are expected to significantly affect the government's financial position or operations in the future periods would be described in this section. Under GASB 103, the previous sections of analysis of budgetary variances and the discussion of infrastructure accounted for using the modified approach is now removed from the MD&A and is now presented in the note to the required supplementary information, also known as RSI. So before we move on to the next slide, we'll do polling question number 2. I'll give everybody a minute to do that. Moving on to our next change under GASB 103, it relates to the reporting of the unusual and infrequent items. So historically, governments were required to determine whether an event should be classified either as an extraordinary item or a special item. And this created a lot of confusion and it was difficult to apply consistently. So, as a result, GASB simplified this guidance by eliminating both categories and replacing them with one single classification called unusual or infrequent items. It's important to note that while the terminology changed, the underlying definitions of unusual or infrequent did not. An event is considered unusual in nature if it is abnormal and significantly different from the ordinary or typical activities of the government. When evaluating whether something is unusual, we're looking at the government's normal operations, not the industry as a whole. An event would be considered infrequent in occurrence if it's not reasonably expected to reoccur in the foreseeable future. In other words, even if something isn't unusual, it may still qualify if it's unlikely to happen anytime soon. One of the important changes under GASB 103 is that management control is no longer part of the evaluation on whether something is unusual or infrequent. Under the previous guidance, governments had to consider whether an event was within management's control. GASB removed that consideration to simplify the analysis and improve consistency. In terms of presentation, unusual or infrequent items continue to be reported as the final inflow or outflows before the change in net position or the change in fund balance. However, GASB 103 now requires these amounts to be presented on a gross basis rather than netted together. A perfect example of this would be, say, a tornado resulted in a $500,000 insurance recovery and a $750,000 impairment loss. Those amounts are reported separately rather than combined into a net amount. The overall goal is to help financial statement users clearly identify events that are outside the government's normal operations and to understand their financial impact. In addition to simplifying the classifications with these events, GASB 103 also expanded on disclosure requirements related to unusual and frequent items, which we'll take a look at next on the next slide. Some of the key updates with the expanded disclosures include what the event was, why it was unusual or infrequent, why it isn't expected to reoccur, and whether it was within management's control. The rationale and intent behind this was to simplify the classification of non-reoccurring events and to offer governments more flexibility in presenting unique events. We'll just take a look at a few examples that likely qualify under this new unusual and infrequent. Some include, the most common one would be natural disasters, a tornado damaging facilities, a wildfire destroying government-owned property, or a flood causing major repairs to roads or buildings. These all qualify because they're not part of the normal operations and not expected to occur regularly. Another one that you could see is maybe any major legal settlements. These are significant, non-routine events outside of normal government operations. To provide some examples that probably would not qualify would include routine storm damage, like normal winter weather repairs, or seasonal flooding that occurs regularly. So essentially, a perfect example of this is if North Dakota receives an above average amount of snow in the year and incurs record snow removal costs, does that automatically make those costs an unusual or infrequent item? The answer to that is no. While the amount may be unusually high, snow removal itself is a normal governmental activity in the North Dakota region. The fact that costs exceeded expectations does not automatically make the event unusual or infrequent under GASB 103. Next, we'll move on to one of the most significant changes under GASB 103, which involves the proprietary fund reporting, specifically how governments classify operating and non-operating revenues and expenses. Historically, governments often applied these classifications differently. Utilities or housing authorities could have very similar transactions but report them differently, making it difficult for users to compare financial performance across the organizations. To address this issue, GASB 103 establishes a new framework for determining what is considered non-operating revenue and expense. And so rather than defining what operating activities are, GASB takes the opposite approach. The standard identifies 5 specific categories of non-operating revenues and expenses. Any revenue or expense that does not fall into one of these categories is generally considered operating. This is a significant shift because it creates greater consistency in how governments report proprietary fund activities. And we'll discuss these categories more in detail on the next slide. Another major change is the introduction of formal definition of a subsidy. Prior guidance referenced subsidies in certain situations, but there was no comprehensive definition. GASB 103 now provides specific criteria for determining whether a transaction should be considered a subsidy. The last major change is the new format for the statement of revenues, expenses, and changes in the net position. The reason these changes are important is that GASB recognized that governments were not always reporting similar transactions in the same way. As a result, users of the financial statements could reach different conclusions about how the entity's financials performance, even when the underlying economics were very similar between two different entities. GASB's intent was not necessarily to change the financial condition of the proprietary funds, but rather to improve the consistency, comparability, and transparency in reporting. By providing a clearer guidance on operating and non-operating activities, GASB hopes to give users a better understanding of what results from an entity's core operations versus what results from financing activities or investment activities or external support. Now that we've discussed the rationale behind these changes, let's take a look at the specific framework GASB established for identifying non-operating revenues and expenses in the proprietary funds. So under GASB 103, the standard now specifically identifies the 5 categories of non-operating revenues and expenses. Rather than trying to determine what qualifies as an operating activity first, governments begin by evaluating whether a transaction falls into one of these non-operating categories. If it does, it's reported as non-operating. If it does not, it is generally considered operating. The first category is subsidies received and provided. These resources transferred between the parties when one party does not receive goods or services of equal value in return. We'll discuss subsidies a little bit more in detail on the next slide. The second category is contributions to permanent and term endowments. These transactions were not considered part of the day-to-day operations of a proprietary fund and therefore are reporting as non-operating. The third category includes revenues and expenses related to financing. Examples would include interest expense on debt and certain costs associated with borrowing activities. These activities relate to how the organization finances its operations rather than the operations themselves. The fourth category is investment income and investment-related expenses. This would include earnings on investments, changes in fair value, and expenses associated with managing those investments. While these transactions may generate significant revenues, they're not considered part of the entity's primary operating activities. The fifth category includes resources from the disposal of capital assets and inventory. For example, proceeds from the sale of a building or major equipment would generally be reported as non-operating because the sale of capital assets is not part of the organization's normal service activities. Of these 5 categories, subsidies will likely be the biggest impact on many governments. GASB 103 not only identifies subsidies as non-operating activities, but it also introduces a formal definition and new presentation requirements. Under GASB 103, a subsidy is generally defined as a transfer of resources from one party to another when the receiving party does not provide goods or services of equal value in return. In simple terms, one organization is providing financial support to another organization to help achieve its public policy objective, rather than paying for a specific good or service. Some common examples might include a city providing financial support to its transit system, or state appropriations provided to a public university. The key concept is that the transfer is intended to support operations rather than purchase a service at fair price. One of the reasons GASB focused on subsidies is that users often wanted to understand whether an enterprise fund is financially self-supporting. By requiring subsidies to be separately identified and reported, GASB improves the transparency and allows stakeholders to better understand the organization's underlying operations. This change also improves comparability between the government and providing a more consistent approach to subsidy reporting. Now that we've discussed GASB's definition of a subsidy, let's take a closer look at how subsidies are categorized under the new GASB 103. The standard distinguishes between capital subsidies and non-capital subsidies. And understanding the difference is important because it affects the financial statement presentation. A non-capital subsidy supports the day-to-day operations of the enterprise fund, rather than capital improvement. There is no limit on using the resources on something other than a capital asset acquisition. And some examples would be property taxes levied or non-restricted operating grants. These subsidies help fund ongoing services and operations rather than the acquisition of capital assets. Now, in contrast, a capital subsidy is a subsidy that is restricted for the acquisition, construction, or improvement of capital assets. In other words, the funding is intended to support long-term infrastructure or capital projects. And examples might include a capital grant received to construct a new water treatment plant, or dedicated property or sales taxes to expand facilities, or debt service subsidies. Because these resources are associated with capital assets, they are reported separately from the operating activities and are not included in the new subtotal introduced by GASB 103, which we will go over in the next slide. So, as I noted, GASB 103 introduces a new required subtotal, and it's called operating income, loss, and non-capital subsidies. So on the next slide, we'll take a look at this, an illustration of the new proprietary fund statement layout. So in this illustration, the first box and area shows the new section for the non-capital subsidies, which then creates the new subtotal under GASB 103 called operating income, loss, and non-capital subsidies. It's very important to note that capital subsidies are located in the other non-operating revenue expenses section, which is the second boxed in area on your slide. The final boxed in area presents what we previously discussed on the unusual or infrequent items. As noted, the inflows and outflows are displayed separately. So moving back to this new subtotal, the subtotal is intended to bridge the gap between traditional operating results and the financial reality of many government enterprises. The new subtotal allows users to see the results of core operations together with any non-capital subsidies that support those operations. And this provides additional context regarding how the organization finances its activities and whether operations are dependent on external support. Before we move on to the next section, we'll do polling question number 3. Okay. Okay. Now that we've walked through the proprietary fund reporting changes and seen how they affect the statement presentation, we'll take a step back and take a look at some other areas of the financial reporting model that's impacted by GASB 103. One of those areas impacted by GASB 103 involves the budgetary comparison information, which is reported in RSI. Budgetary comparison schedules are an important accountability tool because they allow users to compare what was planned at the beginning of the year to what actually occurred. GASB 103 builds upon this concept by providing additional transparency in how budgets change throughout the year. Now, it is very important to note that these requirements only apply to the general fund and major special revenue funds that are legally adopted annual budgets. If a fund does not have a legally adopted time-based budget, these requirements would not apply. And so one of the most significant changes is the requirement to present additional variance information. Specifically, the schedule now must clearly display variance between the original budget and the final amended budget, and it also must present the variance between the final budget and actual results. In addition, GASB 103 requires governments to provide a narrative explanations in the notes to the RSI for any significant budget variances. This is just another example of GASB's overall effort to provide more meaningful analysis than simply just presenting numbers. And the rationale behind these changes is pretty straightforward. GASB wanted users to have greater visibility in how budgets evolve during the year and how the actual financial results compare to both the original plan and the final approved budget. By requiring governments to explain significant changes and variances, GASB is improving accountability and helping users better understand management's budgeting decisions and financial performance. Ultimately, these changes provide additional context around budget development, budget amendments, and actual operating results, making the schedule more useful to the financial statement users. Another reporting change under GASB 103 deals with the presentation on major component units. Governments are now required to include major component units in the basic financial statements using one of two methods. The first method, they can be displayed individually into separate columns alongside the primary government on the statement of net position and the statement of activities, provided that doing so does not reduce the overall readability of the financial statements. The second option would be governments can present the major component units in a combining statement, which is included within the basic financial statements immediately following the fund financial statements. It is important to note that GASB 103 does not change the reporting for entities that already present their major component units in separate columns. For those governments, current presentation practices may continue as long as they remain in compliance with new guidance. So this is a presentation of the first option, which presents the major component units in separate columns on the statements of net position activities. And you'll see this in the boxed in area over to the right. I'll give everybody a second to take a look at this before we move on to the second illustration. The second presentation option presents all the component units in one column on the statement of net position and activities, and this is presented in the first image in the boxed-in area. The major component units are then presented in a combining statement behind the fund level statements, and that is presented in the second image on this slide. I'll give everybody a second to take a look at this before we move on to our next section. Okay, GASB 103 implementation considerations. So some potential challenges with GASB 103 is determining operating versus non-operating classifications, updating reporting templates, training finance staff, and revising the MD&A preparation process. Some recommended actions include reviewing your classifications early, coordinating with your auditors, and updating policies and procedures. Now, auditors will most likely focus heavily on revenue classification judgments, consistency in your application, and adequacy of the MD&A analysis. Overall, I would encourage organizations to involve their auditors early in the process rather than waiting until year end. So some key takeaways with GASB 103. So GASB 103 represents a modernization of governmental reporting model with a strong focus on improving the overall usefulness of the financial reporting for users. The standard is designed to enhance transparency by providing clearer insight into a government's financial position and the results of the operation. It also improves the comparability across governments by promoting more consistent reporting practices, which helps users better evaluate the financial information over time and across entities. In addition, GASB 103 emphasizes clear operational reporting, making it easier to understand how financial activities relate to day-to-day government operations. It also strengthens the MD&A by encouraging more focused and meaningful narrative explanations that better connect financial results to underlying events. While implementation may require additional effort up front, the overall goal is to provide clearer and more meaningful information to stakeholders. Before we move on and start GASB 104, we will do our fourth polling question. Okay, so GASB 104 is a relatively narrow standard in comparison to GASB 103. So it's designed to enhance the information governments provide about capital assets in the notes to the financial statements. The primary purpose of the standard is to improve the clarity and usefulness of the capital asset disclosures by requiring more detailed information about certain types of assets. This helps financial statement users better understand what the government owns, how the assets are being used, and how they are being managed over time. In addition, to the increasing level of detail, GASB 104 also promotes greater transparency and consistency in how capital assets are reported across governments. By standardizing disclosure requirements, the standard supports better comparability and allows users to more effectively evaluate the capital assets from information across different reporting entities. GASB 104 is effective for fiscal years beginning after June 15th, 2025. Okay, so some of the key objectives with GASB 104 is to improve the transparency of capital asset reporting. GASB 104 requires certain capital assets to be disclosed separately rather than being grouped together into broader capital asset categories. The second objective is to increase consistency across governments. Recent GASB standards introduce new types of assets, including leases under GASB 87, public-private and public-public partnership assets under GASB 94, and subscription assets related to software arrangements under GASB 96. Without the additional guidance, governments could disclose these assets differently, and so GASB 104 creates a more consistent reporting requirement. The third key objective is to enhance decision usefulness for financial statement users. Investors, bondholders, or any users will need to understand what assets a government owns and how those assets are being utilized. Separate disclosures provide better information for financial analysis, risk assessment, long-term planning, and asset management decisions. The fourth key objective is to provide information about assets held for sale. The standard introduces disclosure requirements for capital assets held for sale, which allows users to understand which assets the government intends to dispose of, any potential future cash inflows from asset sales, or changes in operational or capital strategies. The fifth key objective is to better reflect the evolving nature of capital assets. Overall, the primary objective is to ensure users receive clearer, more detailed, and more consistent information about certain capital assets and assets held for sale. So some key reporting changes under GASB 104. The most significant change is the requirement to separately disclose certain categories of capital assets that were often grouped together in the past. Those include lease assets, your intangible right of use assets, your subscription assets, and any other intangible assets by major class. Governments will also need to evaluate each reporting period whether any assets meet the criteria for being classified as held for sale and provide the required disclosures. We'll go through some disclosure illustrations for these two. So in the first illustration, this for the capital asset note disclosure, you'll see the boxed in items now illustrate GASB 104's requirement to separately disclose capital assets related to intangible assets within the capital asset note disclosures. So there's a lot of information going on in this note, but the mainly focus on the two boxed in areas where we separately disclose intangible assets. The second illustration is the capital assets held for sale disclosure. And it can be a narrative form and it would read something very similar to this. I will kind of give everybody maybe a moment to read it, and then we'll move on to our final section for GASB 104. Okay, so some practical considerations or impacts for GASB 104 would be do we have lease assets subject to GASB 87? Do we have any subscription-based software assets under GASB 96? Are there any capital assets expected to be sold? Or will our capital assets note disclosures need to be revised? These are all great questions to consider for this GASB update. Some recommended actions would be to review your capital asset categories, update your disclosure templates, obviously coordinate with your auditors, and evaluate assets held for sale annually. For many organizations, implementation may be relatively simple, but it's important to review capital asset disclosures to ensure all required assets are separately identified. Now we will launch our last polling question. To close out today's discussion, we've kind of walked through key updates and upcoming changes under GASB 103 and GASB 104, including the impacts of financial reporting, the MD&A, revenue classifications, proprietary fund reporting, and enhanced capital asset disclosures. The goal of these standards is to improve transparency, consistency, and overall usefulness of the governmental financial statements for users. Now that concludes all the material that I had to present today. At this point, I'll pause and open it up for any questions or comments on the updates we covered.
I do not see any questions in our chat.
Perfect. This is my contact information. Obviously, please feel free to reach out anytime if you need further discussion, support, or resources related to either of these GASB updates. I really appreciate your time today, and I'm happy to help with any questions anyone may come up with after the presentation as well.
All right, well, that brings us to the end of today's session. Bethany, I want to thank you so much for walking through all of that, especially the practical audit tips, the key things to keep in mind as everybody implements these new GASB standards. To everybody that joined us, thank you for taking your time. We know you have a lot on your plate, so we really appreciate you being here and getting ahead of these standards that are going to be effective for some of you here sooner than the others. Just a couple quick reminders. We did record today's webinar and we'll be sending out a link for that shortly. So if you want to go back and rewatch it, you sure can. Or if you need to share it with a team member, you can also do that as well. If you do have any questions that you think of later as you start implementing these and thinking about how they will be implemented with your organization, or you want to talk through some of these standards and how they apply to your specific situation, please don't hesitate to reach out to us here at Brady Martz. We're happy to be a resource for you and make this a smooth transition process for implementing these standards. Finally, a survey is going to launch at the end of the webinar, and we would certainly appreciate you taking a minute to fill out this information so that we can provide better and helpful trainings in the future. With that, I just want to thank everybody. Have a great rest of your day, and we hope to see you soon at another Brady Martz webinar.